You guys have to stop trading on the 1 minute. If you can't even trade the 4 hour or the daily and know where the daily time frame is going to go, how do you expect to trade the 1 minute? This is what's going to be detrimental to your trading, and is why a lot of you are not profitable, is because you're trying to catch the best entries and the best risk to reward on the 1 minute when you can't understand higher time frame movement. So in this video, we're going to look at how to do time frame analysis and how to trade off the different time frames to improve your trading. So let's get into that. Welcome back, guys. Harry here, known as Trade Shop, and in this video, as I said, we're going to look at, you guys need to zoom out. You need to know the bigger picture because your trading ideas in the day come from the higher time frame. So we're going to look in how do basically I'm going to look over this week of trading, because I think this is a perfect example of how many people would have got caught out looking at the smaller picture instead of the bigger picture. And yes, if you do look at the bigger picture, you'll actually will get more RR than looking at the 1 minute and looking at your bank levels and I don't know what. So yeah, with that being said, if you're new here, welcome to the channel. Please leave a like and subscribe. It always helps the channel, and I try to get all of this information out to more and more people so that they can benefit from this free content and not learn stuff that's going to confuse them and be basically BS. So I just want to try help, and a like and subscribe always helps, and leave your comments down below. So yeah, as many likes as possible is always appreciated. And also, if you have questions or want to improve and want to send in your charts because you have a problem, that's why I made this group. It's a safe haven of the forex industry. It's in the description. Join the Discord and ask questions, and I'll reply to you there and try to help you as much as possible. So let's get into this video with all of that YouTube stuff out of the way. And people this week were trying to take sells, and people, which I don't understand why, because this whole week started from one candle. From one candle, I had, a good understanding of where we were in the market and where we are going. And that one candle started from the weekly candle. And if you don't understand where the next weekly candle is going, you have a big problem. So starting off with the weekly candle, we started off the week here and I saw this. After seeing this, I'm like, all right, this is a support. And if you notice, we are in a range. We tapped the bottom of the range here. We came to the top. We broke down. But this could just be a higher low to continue bullish, right? And now if you look at the monthly candle now, you can see we have this long wick to the downside. And now we are almost closing above the range in 12 days. So we'll see what happens if we reject or not. But I knew from this one weekly bullish close that high chance we are trying to create a support here and should at least test some upside to maybe 154-ish, around this resistance here, right? Based on a weekly time frame. So from that picture here, people are like, oh, we're sells, I'm not sells here. I'm not looking for sells. Why? Because of this weekly bullish candle. Now, I'm not going to trade off this weekly bullish candle because I trade during the session, London session. So I know my best trades are going to come above the weekly high, because we know price action. This is a low, this is a high, this is a higher low, the bottom wick, and then if we're breaking this, we're making a higher high. So the best confidence trade are going to come above that. But just based on that, I knew we were continuing up. Now we go to the daily time frame, and if you look at the daily time frame, my computer wants to update, we can see what happens here. So we started the week on this candle here, daily candle closing bullish as well. And then we came up during the session and we tested this zone and we closed bearish. Now, many people at this point were saying sell, sell, sells, but they're forgetting the weekly candle. Remember, sells don't make sense below until we're below this low or minimum, this low at minimum, right? We already broke the weekly highs and we're trading above the weekly highs, but people were saying sell, sell, sells because they see a rejection of this zone and they think price is going to come down here like this and they're going to get sells all the way down to the bottom of the range. But what people don't understand is that sells don't make sense because we have a weekly bullish candle. If we had a weekly bearish candle, then we had this bearish daily close, yes, that could make sense for sells. But we had a weekly bullish candle. So this candle here could just be a pause in the market before continuing up. And sells at minimum makes sense if we start creating resistance below the low. Yes, in my session, I would look for sells if we created resistance. But if you go to the lower time frames and I mark out this candle here, we go to the 4 hour and see what it was. It was just a deep pullback to this structure here, right? So this is what the candle was. We had a nice push up. We had resistance at this zone here. So we found some resistance. I'll actually draw a box to make it a little bit clearer for this example. But obviously we have a resistance zone here, a very strong resistance zone, right, that you can see has been a problem in the past here. So obviously we're going to see reaction here. But tell me this, guys, where do sells make sense? Do sells make sense from this zone? Yes, you know, this is a reaction, but sells don't make sense. I mean, if you're trying to catch this one candle, yeah, great, you caught 75 pips, but look at the upside you missed. Why? Because you're concentrating on too small of time frames. And we know the upside move is always going to be bigger than the downside move when we're going in an uptrend. So the worst thing you can do is try to catch a sell, because you will have less chances of winning that position because of how limited the downside movement is. So you have 75 pips in this zone to get it right? So you have 75 pips and you have to get a trade within that 75 pips. Or you can look for buys because that's our bias, and you have 437 pips here to get a buy. You have 437 pips to find an entry instead of 75, and this is where people miss that, right? So what do? All we do is we pull back to our structure, right? It's a simple retest. Here's your breakout. We find some resistance, we come back down, we find the support here, you take price up. Very, very, very simple. And people don't understand. If we started creating lower resistance, yes, okay, this starts making sense for sells. You can look at my video about change of character, which I'll probably link above. That will help you to look for reversal, but there's no signs here. Just 2 bearish candles after 1, 2, 3, 4 bullish candles is not really giving me any confidence, right? Pullbacks are good, they give us opportunities. So here's an opportunity to buy. If we go now on lower time frames and look for some entries, and I'll just give you, a quick example. Obviously we're pulling back to this zone, so we're going to draw a box to our zone where we're pulling back to, and we're going to look for some entries probably on 30-minute. What do we have to look? We have to look for change in structure. What do you see here? You see a very, very nice reaction from the lows. We find some resistance here like this, okay, and you can take it either impulsively at the break of the highs, or if we probably go on the 1 hour here. I hope it doesn't change the chart. This is also a good option here based on this closure, because you have to look at the candles backwards, guys, right? So if I showed you the chart like this, let's say we came to here around the charts to this point. So we see it reach this low here. So we know this is our whole rejection. We're looking for rejections here because we want to take buys, right? So we go next candle here and we see, all right, price is trying to make some support. That's a good reaction. But what's very, very, very important here is price is closing above the most. This is a break of structure here, right? It's closing above this structure. On the lower time frames, you can see that this structure on a 1 hour is being broken, right? So you can see the reaction out of that. On the 1 hour, it's being broken. Now what happens next? Well, it's very simple. As long as this low is respected, we are bullish, right? So we can either enter on this candle here, but stop loss will have to go below this low here, or you can wait for more structure because this is a bit of a dead time. This is like the end of Asian session. So we get a push up. Now we get a pullback. So any support breaking this area here, you can look for entries. Anything breaking this area here, if we have a support. So what happens? Creates a support breaking this area. You can look to now target the highs and continue. There's your trade, and now you're in this trade. Boom. You target the highs, and that's your trade done. That's 76 pips easy. Now you can even hold this trade if you want, and you see you get the continuation. Your next opportunity is here as well once it creates a support, right? So you can see how that works, and that's the type of trades we are looking for, right? So even if you miss this entry here, and you can go down to the 15-minute, that even could have been an entry right here. If you wanted to wait for the close above, if you don't understand the full structure, you could have had an entry on the 15-minute here is also fine. So you've had many options. So now let's go see what happened later on. Let's do this, and now let's see what happened later on. So then we pushed up, we had another deep pullback here. Now this confused a lot of people because it closed below this structure. But what you have to understand is, this is what I want to explain to you. Again, we're still bullish. So closing below the first structure is an issue. I will agree it is an issue, but we need to see resistance. We need to see lower resistance. So if we go to this candle on the lower time frames, we did not see resistance. We saw a beautiful reaction, and all that was pulling back to this structure here, right? So we see it pull back to this structure here, and what happens? We don't see lower resistance continuing down. That's where, if people are looking for sells, but again, people are too concentrated zooming in on the lower time frames. They don't understand what's happening on the higher time frames. We are still bullish. So we pull back here. You could have had entries to take this up. Then again, we have the same scenario here. Again, we have a deep pullback. Actually, that was the same as this deep pullback here, right? So this is repetition in the market. So we have the deep pullback, same to this zone. Market repeats, right? We come up, we take a nice leg, right? And then we take the deep pullback to our structure. Deep pullback to our structure. Very, very simple, guys. But people are too zoomed in on the 1 minute here, looking for sells. Oh, it reached my zone. You know, let me try catch this sell here. I mean, look at this, guys. What are you doing? I mean, seriously. You guys need to understand how the 4-hour moves before you can even think about trading the 15-minute, let alone the 1 minute, you know? So understand how the 4-hour moves, and then you can look for your entries in lower time frames, right? So stick to one time frame. Maybe if you find that 15-minute works for you, stick to the 15-minute. Just take 15-minute closures. Look for entries on 15-minute closure, you know? You can look for a nice entry. This could have been an option here at the break of this zone here. That could have also been an option, this candle here. This option here is a bit early because it could have found resistance here, right? So you're looking for that reaction. So it's a bit early, but entering above here makes sense, you know? But this is my point. Learn how the higher time frames move before you guys trade the lower time frames. I'm not saying you can't trade the lower time frames, but you need to limit your trading on the lower time frames to 15-minute and 30-minute. Really, you see a lot of people showing you how to trade the 1 minute and stuff like that, but you guys have to really accept your own ability levels. How good are you at trading, right? Can you understand the higher time frames to use the lower time frames to your advantage? For me personally, I really don't think you guys should be trading on the 1 minute. I don't see a reason. I don't think it drastically changes your RR, and I think that trading off the higher time frame would allow you to get longer moves. And I think as you progress, then you can start to look at trading at the 1 minute. And a lot of people I started trading with the 1 minute in the beginning when I started my trading journey. And to be honest, it would never work, because what would happen on the 1 minute is you'd get stuff like that. Like you'd find an amazing entry here, like a 4 pip stop, and then you'd get that, you know? Or you would enter here like this, and then it would go up like 6 pips profit, and then start messing around, and it's like, you don't know which one is going to be the right one because you don't understand the higher time frames, right? So concentrate on maybe a 15-minute, get consistent on the 15-minute. Then once you're consistent on the 15, 30-minute, and you know how to analyze the 1 hour and 4 hour daily and weekly, then go and look, okay, this is my 15-minute entry. I know I'm consistent on this. How can I now improve my entries and use the 5-minute to maybe help me? Then after that, you can say, how can I use the 1 minute to help my entries? And it's all situational basis, right? So this is what you have to understand, guys, and you don't have to be catching every single move. I know people on this move down here, they're like, oh, this was a selling day, you know, they're like, we need to take sells, we need to take sells. Oh, we missed the move. You didn't miss the move, guys. You didn't miss shit. I mean, this was like a 100 pip move, but look at the move afterwards. Look where we are today, man. We're at 157. And people are trying to catch this down move because they see big candles. I don't care about big candles. What I care about is where we're going, and where we're going was up. So that's what people have to understand. Make sure to have your higher time frame analysis. I have so many videos of how to do high time frame analysis, but this is how you use your time frames to your advantage. Use the higher time frames for analysis, and then try perfect your entries on the lower time frame. So I hope this video helps. Take care, guys. Trade sharp, and until next time. Peace.